welcome to today's live technical analysis. As always, we are going to be starting off with the euro against the US dollar. As a kind reminder, we do have the ECB's interest rate decision, which is due out tomorrow. Majority of market participants are anticipating the bank to cut by 25 basis points. So attention, as we said yesterday, will be turning to ECB President Lagarde's press conference. So for the euro, note the S1 support line which we had placed together at 1.0885. That has been validated on numerous occasions and is now currently acting as a support level. Having formed a new lower low, we would like to see perhaps a retracement up to the downwards moving trend line, which was incepted at the beginning of October. So testing that trend line and then continuing on its descent. But we would require a clear break below that S1 support level for our bearish outlook to continue. If it breaks above the downwards moving trend line, then we could perhaps showcase that the downwards momentum may have been interrupted, and thus we could adopt a sideways pass between S1 and R1. In the event of a clear break above R1, then we could maintain a bullish outlook and take aim for that R2 resistance level at 1.1005. I'm going to be adding the text label for the particular pair, Euro USD, so that it's easier for us to identify it, at least from your screens. Makes it easier to follow along. Perhaps you could open your charts and see what we're looking at together. So that is Euro USD. In terms of financial releases, nothing major today for the euro. So we are going to be moving on to the USD against the JPY. Now, the dollar may have been strengthening from former President Trump's comments yesterday. So the tariffs that he might be implementing, and given that some betting odds are giving him more of a favorability against current Vice President Kamala Harris, makes his comments potentially impactful in the market, and as such, we may have seen the US dollar gaining against his counterparts. For the USD against the JPY, now we did note there was a break from that steep upwards moving trend line, but it has tested that R1 resistance level at 149.75. That was on a daily, and now appears to be taking aim once again. But I wouldn't be surprised if it seeks some support close to S1 before continuing on its ascent. But for our bullish outlook to continue, we would require a clear break above R1, and we do have RSI at 62, which does imply a bullish market sentiment. Now, we can add other indicators such as OBV, we could use Ichimoku theory as well, all tend to point towards a bullish outlook for the particular pair. And if you use Ichimoku, you can see that there was a crossover from the conversion line above the baseline. The cloud has now turned positive. It is currently within that cloud, and I can show you exactly what I mean. So you can go to Insert Indicators Custom, Ichimoku, and then as you can see on your screens, this is the conversion line. Below is the baseline, which will be indicated in red. If I'm not mistaken, this will be the cloud, and then we need the lagging indicator, which is green. So we're going to be adding that to purple. And let's see. So you can see that is a cloud, and then we need to make this slightly larger so that we can see it a bit more clearly. And then I will be adding lagging span 1 and then lagging span 2, which is this, which is going to be green, and then once again it's red, not pink. Let's see. Voila. Now, it may seem very busy on the chart, but this is Ichimoku. This is the lagging span, drawn, if I'm not mistaken, 26 periods back. Now, it is above the price action, which in itself is bullish. The cloud is positive. You can see leading span 1 is above leading span 2, so the cloud is green. It is currently entering and is within the cloud, which may act as a point of resistance. There was a crossover from the conversion line above the baseline. So the blue line crossing above. Let's see. We do have the Bollinger Bands here, so let's just remove those. So you can see the blue line crossing above the baseline. That is also bullish in nature. Lagging span above the price action, cloud is green, entering the cloud, finding some resistance. So we are still bullish for the particular pair, and OBV tends to support that theory as well. Let's add a text label here, USDJPY. Higher highs and higher lows being formed on OBV. That's bullish for me. So for the British pound against the US dollar, now we did note that there was some strengthening from the US dollar. The pound may be weakening for other reasons as well. And I would point you towards the release of the CPIs for September earlier on today. Headline and core showed easing inflation pressures in the UK economy, which may increase pressure on the BOE to adopt a more and more dovish tone. So expectations for more or bigger rate cuts by the bank tend to weigh on the British pound, has broken below that S1 level. We are still on the daily chart. If today it closes below that S1 level, next potential target for the bears could be S2, and lower than that would be S3. So we are maintaining a bearish outlook if it closes below that S1 level today. The RSI indicator is below 40, which tends to imply a bearish market sentiment as well. So further supporting our case would be the RSI indicator, and if it closes below that S1 support level. USD CAD. Yesterday, Canadian dollar strengthened slightly. RSI is running along the figure of 70, currently at 69. Still a bullish market sentiment. Might see a retracement back down to S1, testing that this is indeed support before continuing on its ascent. But for a more macro perspective, I would be bullish on USD CAD. Aussie, now we've said the release of Australia's employment data is set to occur tomorrow. The unemployment rate is expected to remain steady, 4.2 or 4.1. I've forgotten that exact rate currently. But if it comes in lower than expected, then it may provide support for the Aussie. If it comes in higher than expected, could weigh on the Aussie. You can see that in terms of technicals, the Aussie has broken below that support level, which we placed yesterday at 0.6705. So this would now act as resistance, so support and resistance. And next potential target for the bears could be S2 at 0.6570. The RSI is below 40, which also tends to imply a bearish market sentiment. So we would be maintaining a bearish outlook for the particular pair. If someone would like to look at S3, this would be S1, S2, and then I would be placing S3 at this wick here, or perhaps slightly higher, but it would be too close to that S2 support line. So 0.63613 would be my S3 support level, and we are maintaining a bearish outlook for the particular pair. US dollar against the Swiss franc. So found support. We are on the daily. So yesterday moved slightly lower. RSI is at 58, but it's close to 58. So it didn't come from 60 and then drop to 58. Polish market sentiment might be increasing. That's nice for the particular pair. If it stays above S1, I would be maintaining a bullish outlook, but it does need to break above that R1 resistance level. If it comes back down and then stays in a relatively sideways fashion, we would maintain a sideways bias. New Zealand dollar, note that S1 support level, wick down, tested it, S1 0.6405. RSI is at 38, so below 40 as well. We are maintaining a bearish outlook for the Kiwi as well, but it does need to close below that S1 support level. WTI cash continuing on its descent. Bearish outlook for the particular commodity, having broken below the reading of 50, now 45. Bearish market sentiment as well. Target for the bears could be 64.60. For gold, we said that our R1 level is 2,685. I could now also draw an upwards moving trend line. Tends to support a bullish outlook. RSI is at 67. So further supporting that bullish outlook, we are maintaining once again a bullish outlook for the precious metal, but it does need to make a clear break above R1 at 2,685, and then we do have the hypothetical resistance level at 2,730. Higher than that is another hypothetical resistance level, 2,780. For a sideways bias, we would require it to reject R1, so failing to break above, then coming back down, breaking below the upward trend line, but failing to break below S1 would then constitute for a sideways bias. If it breaks below S1, bearish down to 2.6K, lower than that, 2,550. Intel still staying above that old R1 level of 22.10, which is now support. Microsoft, we did say yesterday, sideways. OBV is showing a higher high, might be a retracement, but looking at the price action, I would be maintaining my sideways bias for the particular uh, company stock price. Hammer formation, reversal pattern. We'll see. Nvidia is not looking that good. I would attribute part of Nvidia's fall to the leaked Q3 earnings report of ASML, which, if I'm not mistaken, is placing their sales at 45 billion instead of 50, or 35 instead of 40. Essentially, a revision of $5 billion lower. A bit of a concern considering ASML's status within the tech industry. Lower demand, so lower sales, might be worrying for the rest of the tech sector, which is why you might be seeing the Nasdaq 100, S&P 500 also moving lower, despite Goldman Sachs earnings yesterday being actually more than fine, and Citigroup beating the expectations by economists. ExxonMobil tried that R3, come back down, 119.53 looks as my new support level. Swedish krona sideways. So euro against Swedish krona. Euro against the Aussie. So higher high, cleared an all time, came back down, higher low, moving higher. RSI is at 50, relatively sideways, but does appear to be having the bullish momentum on its side. And this might make it a bit easier. So note the price action came down, cleared this high here, so it took everyone that has stop loss, retraced lower, found some support, and is now moving higher. I would be bullish for the euro against the Aussie. Mid-range of the Bollinger Bands acting a bit of a support level. RSI closing on 50, about to break up, applying a shift from a bearish towards a bullish market sentiment. FTSE 100 staying within a sideways motion between that S1 and R1 level that we have placed a long time ago. Tesla hovering above that S1 level of 204.09, sideways between S1 and R1. Japanese stock index slightly bullish, but might be to retracement. IBM swing high, coming back down, perhaps 229.50 as a support level. Louis Vuitton taking a hit. Louis Vuitton's earnings were not that good. The group has reported lower sales. That's an issue, and it makes sense with China. Our size below 40, bearish market sentiment, so it gapped lower. If it gaps once again, that could be a continuation gap. So this might be a breakaway, then a continuation, and then we'd like to see an exhaustion gap. So this was break, continuation, exhaustion, hammer formation, reversal. Lockheed Martin. Okay, that's an interesting story. Airbus, Shanghai would be bearish for the day. Volkswagen coming back down to S2, 89.50. It's not looking that good for the company stock price. Google resting above R1, 163.98. Now, we always say if it breaks above R1, the next target could be R2. But for this case, if I was going to be more confident that this is indeed a bullish outlook, I want to see it clearing this old high at 167.84. Then I might be more persuaded that it could reach close to 173.63. But you can see high, higher low, moving higher, needs to clear 167.84, and then I would be maintaining a bullish outlook for the company stock price. up until 173.63. Deutsche Bank moving higher. JP Morgan, Dow Jones 30, resting on 4,675. Makes sense. Acted as resistance, now acting as support. Nasdaq, S&P 500, daily chart move lower. So essentially that's ASML's doing. Boeing, surprisingly, at our 151.95. We could do technicals for the Nasdaq, and I think that is what we are going to do. So let's add our text label, US 100. Now we are using the 4-hour time frame. Intraday traders might like to use the 15-minute time frame more. If you're more of a long-term trader, you could use it daily, 4-hour, 1 hour. Personally, I like to use higher time frame analysis, so I look at it from a 4-hour, see if I can determine the daily bias. Stock index doesn't really matter. I want to see the bias, and then I could potentially drop down to a 15-minute and then refine those support and resistance levels. But I am using a 4-hour, so it's a bit easier for us. Now, this bearish candle wick down, took out sell stops here, and found support here. Makes sense. This was a high, found support and moved higher. Heavy buying pressure, broke below, acted sort of as a resistance level, tried to seek that resistance, broke above, sellers become buyers, moving higher. So my S1 would be at the 2009 20,000. That's my mistake. 20,095. That would be my S1. And then we can use Ichimoku theory. We can see what indicator we would like to use for this particular index. ATR, ADX, MACD, Ichimoku parabolic SAR, standard deviations, Bollinger Bands, we already have. CCI, and that's for commodities, MACD, stochastic oscillator, could use a stochastic as well. K period, price low high, simple, fixed, back down. Nice. Okay, so this might be a retracement. Bill Williams percentage. That's alligator. We can use Ichimoku. Ichimoku Kinko Hayo. But then we have to edit it again. Let's stick to purely support and resistance levels for today. And if there is demand for Ichimoku theory, then you could adopt that into the daily lives. But for now, let's keep it simple. Support. Wick down, support level. That's fair. We need S2. Where is heavy buying pressure? I'm taking, as usual, let's see. Voila. This is the area I'm looking for. I'm seeing a lot of buying pressure, but now it's time to determine where we would place our support level. So what I'm looking for is a level upon which either acted as support or as resistance on numerous occasions. So one could take it from the left and then begin. And immediately you can see wick down, move higher, wick down, test it again, and then move higher. Upwards moving trend line as well. So further supporting 19,645 as a support level. For a more intermediate support level, I could take this high here. And I'll show you why. Now, at the beginning, you can see that this doesn't really valid. This could be an order block or and wouldn't be really valid as the beginning of a support level. But higher low, found support, tested by this wick, tried to pierce through, failed to. When it broke lower, tested once, twice, a third time, broke on the fourth, wick down lower, took out anyone that had stop loss around here, acted as support, broke below, moved lower, managed to act as resistance, but when it broke higher, moved higher. So we have three support levels, and that's simply using the price action. If you look at the RSI indicator, it currently registers a figure of 40, which does imply a relatively bearish market sentiment. So we have placed our support levels, and now we will be denoting those support levels using the text labels. Now, even though we know where our support levels are to the right hand of the screen using the figures, sometimes it makes it much easier and much more organized if you simply just add in that text label. Makes it easier for you to see exactly where that support level is. You can calculate, you can use it as a reference point, and simply put, it is less of a strain on your eyes if you're looking at the charts all day as we do. So 19,645. So that is my S3 support level. I can now remove this rectangle from your screens. And now the question becomes, well, we've placed support. Where are we going to be placing our resistance levels? And I would take my horizontal line, this here. Most recent price action does validate it, but this for me would be my resistance level. Even though the price action is here, I still think it might have some way to go before it finds resistance. The reasoning behind it is you can see, as we did here, now this acted as support, then resistance. Well, this acted as resistance. And then I can see your screens. I can see what you're also seeing on your screens because this is a bit larger for me. Look at the price action I've denoted in this rectangle. You can see that this has acted as resistance on numerous occasions. I would ignore the piercing of the wicks, look at the bodies of the candles, and when it managed to break above, it moved higher. So this would be my R1. For my R2, at this peak here, same scenario, acted as resistance, and then it left about, let's say, 200 between one another, so 20,400 or 20,500. So I would be placing it at 20,800, my R3. Roughly the distance between R1 and R2. So this would be R2. For R1, 20,280. And then we are placing that hypothetical R3, 20,800. And there we have it, R1, R2, R3. And then the coinciding support levels. So for my bearish outlook to continue, would have to break below S1. I would like to see a testing of resistance at 20,280 first, and then sharp decrease lower, breaking S1, taking aim for S2, and then potentially even S3. But I am maintaining a relatively bearish outlook. I'm pointing towards the RSI indicator. It's broken below the mid-range of the Bollinger Bands, and if it moves lower, we might see a shift in the bands as well. Overall, bearish for the Nasdaq, despite Goldman Sachs doing better than expected, and Citigroup, and etc. So that does it for today. I will be seeing all of you tomorrow.
Just go ahead and get started now. So, first things first, as per usual, a disclaimer. So, products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. redistribution of material is strictly prohibited. Okay, so I'm Melanie and I will be your speaker for today's webinar on support and resistance. So here's our agenda for today. Firstly, we'll be looking at using swings for support and resistance levels, followed by looking at where exactly you should place your starting points. And then we'll be going into pullbacks and overlaps and combining these two in order to use these with Fibonacci as well. Okay, let's get started. So firstly, we'll go into how exactly you can use swings for support and resistance levels. So support and resistance levels in trading basically refer to prices at which an asset's price tends to stop falling, which would be your support, or stop rising, which would be your resistance. So to identify these levels, you can use technical analysis tools such as trend lines, moving averages, chart patterns, so on and so forth. Additionally, you can also look at previous highs and lows of the asset, as well as volume data to identify potential levels of support and resistance. So this is basically what we will be focusing on today. And it's important to note that these levels are not absolute and can change over time. So continuous monitoring is necessary. So I've added an image here for you to see how exactly we can use swing highs and lows as resistance and support levels, but we will go through it more in depth in the next few slides. So take note of how there are clear peaks and troughs in the market structure, and these areas can be used as your support and resistance levels. Okay, so firstly, let's look at an example of insignificant swings. So these are bad points to use for Fibonacci starting and ending points, but they're also not exactly good to be used for resistance and support levels. And I've shown you an example here in the GIF. So you can see that the um, price movements are really small and there's no significant swing highs or lows. Here's another example. So once again, there aren't really very clear swing highs or lows, and price movement is very small. Okay, and now let's take a look at a correct example of significant swings. So here you can see that there is a clear move up and down with obvious peaks and troughs and yeah, clear market movements basically. So in this GIF, that's basically what you are looking for when you are deciding on a chart to analyze on. So people may ask like which time frame do you use, which time frame do you recommend? And it's completely up to you. It depends on what kind of trader you are. So you could, if you're a scalper, of course, a smaller time frame would be better. And if you are a swing trader, a longer time frame would be better. Okay, but still, when deciding which time frames to use, a important consideration is also the clear market structures. So you want to look for something like this, a clear market structure with significant swing highs and swing lows. Okay. Okay. So support and resistance. You can use these levels as take profit and stop loss levels. But you should not use it as an entry if there are no other supporting arguments, such as Fibonacci or other graphical levels to support your analysis. Using a recent swing high or a recent swing low is typically considered a weak level if it's just that level alone. So you can see in this GIF here, oops, in this GIF here, the recent swing high and lows Although they are significant, so you can see them very clearly, but they are not strong levels to use because we don't have additional Fibonacci levels to support them, and we don't have pullback or overlap support levels or multiple swing high or swing low support levels. So I'll show you what exactly I mean by that. So this is typically what you want to look for. So we're looking for multiple swings. So if at least two swing high or swing low levels line up nicely, these are typically much better levels to use. So you should try to find areas where these might line up, and it does not necessarily have to be at the exact same level because these tend to be areas more so than levels. So in this GIF here, you want to see how far you can, yeah. You want to see how far back your resistance or support line can go, and it's okay to cut through small wicks since support and resistance levels are usually in areas. Okay, so you can see here we have four swing highs that are about the same level, and we want to avoid cutting too many candlesticks, but if you're just cutting the wicks like in this example here, that's perfectly fine. Okay, so now that we know how to identify significant swings and use them as support and resistance levels, what are some things that we can look out for when inputting a support or resistance level? Okay, firstly, picking a starting point. So when picking the starting point of pivot, which is your entry level, support and resistance levels, these are typically your rules that you can follow. Excuse me. So firstly, we want to check if there is a swing high or low, and we've gone through those in the previous slides. We also want to look for pullback or overlap levels. So if you are wondering what exactly those are, I'll get into those in the coming slides. Next, we want to go as far back as possible. So as you saw in the previous slide, I did mention we want to try and pull it back as far as possible without intersecting too many bodies of the candlesticks. So we want to avoid cutting the thick part of the candlestick and just the wick. So just the little sticks on top of the candles, those are perfectly fine. Okay, so the orange thumbs over here represent an okay intersection. They're not preferred, but not exactly wrong. But preferably, we want to look for intersections that are only of the wicks, like over here. Okay, some more examples over here. You can see this thumb, this red thumb is what we want to avoid because it's cutting too many bodies of the candlesticks. So these green thumbs are what you typically want to look out for, where you are just cutting the wicks of the candlesticks. Okay, okay. Another example here. Similarly, this red highlighted area, it's not preferred because you're cutting too many bodies of candlesticks. Okay, yeah, so the green thumbs, again, just cutting the wicks of the candlesticks. So something like this, would have multiple swing highs. We can just stop the support, or in this case, resistance. We can stop the resistance level just at this green thumb here. And it would already be considered a pretty significant level because we have three swing highs that line up nicely at the same level. Okay, which is important because you can see that price has tested this level many times before. Okay, next let's go into the pullback and overlap. Let me know in the chat if you guys have are aware of what exactly pullback and overlap level is before I show you guys the next slide. Okay, I think yeah, because I do mention these a couple of times in our previous webinars, but no worries. Let's just go ahead and take a look at these. So firstly, we have pullback. So pullback, from the name suggests, we are expecting price to pull back to a certain level. Okay, so it's basically a strong level of support because it breaks out from a previous resistance level and price is now dropping back to visit it again. So in this case, we're just talking about the pullback support first. So if you take a look at the GIF, this is a pullback resistance. So just ignore that for now. Okay, pullback support is basically the opposite of that, where we are expecting price to retrace back to your support level. Okay, so a pro tip is when a pullback support lines up with a Fibonacci level, it's typically considered to be very powerful. For pullback resistance, these work well when it breaks a significant swing low and then starts pulling back to it. So it's even better, again, if there are multiple Fibonacci levels that are lining up with it. So here in this GIF, we have, okay, ignore the Fibonacci levels first because it is a little bit messy. But if, maybe I'll just refresh it. Okay, so here is our swing low for reference. Okay, so this is our swing low that we are using as a support level for now. But since price has already broken it and it's dropped below the support level, it's then a resistance instead. Okay, it's a resistance because we are expecting price to reverse off of that level. And that's why we call it a pullback resistance because we are expecting price to retrace back to the level and pull back to it. Okay, it is a little bit confusing, so let me know um if you guys have any questions. But now if we talk about the Fibonacci levels. So here we are using a Fibonacci retracement. Okay, and I'm circling the 38.2 because it lines up nicely with my retracement. Once again, I have another retracement. In this case, the 61.8 lines up with my resistance, pullback resistance level. Okay, and now you can see that price really pulled back to our resistance and bounced off of it and headed downwards again. Okay, okay, maybe I'll just let you guys watch the GIF one more time. So price has broken out of the support level, the swing low support, becoming a pullback resistance. Okay, and now that the resistance lines up with not one but two Fibonacci retracements, it's considered a confluence area. That's why I've highlighted it. Okay, and yeah, you can see price reversing off of the level again. Okay, so confluence areas typically are considered quite important levels because you have multiple Fibonacci levels or moving average levels or whatever that line up with your support and resistance. Okay, so those are is basically evidence that price is likely to respect that level again. Okay, so here's an example. Firstly, I have three swing highs that line up nicely. Okay, at this area, this red highlighted area. Price breaks out of the resistance area and it moves upwards. Okay, moves upwards, and once it breaks out of this area, it's considered a not Fibonacci, it's considered a pullback support. Okay. Um, Basically, when you have a resistance, once price cuts or breaks out of the resistance, it's then the opposite. So then it's a support instead. Okay, so then we call it a pullback support because we're expecting it to pull back or retrace back to the level, as you can see from the dotted arrows here. Okay, another example. In this case, we have a pullback resistance. In the beginning, we have three swing lows that line up nicely. Okay, so swing low, we would think of a support. Now that price has broken out of the support level, it's then a pullback resistance instead. Okay, so the pullback resistance, we're expecting it to retrace back to that level. Okay, another example here. So we have a significant swing low here over the circled area, and thus it is a possible support level. But now that price has pulled back and it has surpassed the swing low support, it is then a pullback resistance. Okay, so now let's see if price pulls back to this resistance level. And you can see that it actually did. Okay, so price has reached the pullback resistance level just as we expected. And once it reaches and reverses off of it, it will then be called a resistance overlap resistance level, which is what I'm going to get into in a little bit. Okay. Okay. Next we have the overlap support and resistance. So an overlap support occurs when there are prices that touch the line from the top and from the bottom. So the more times that it reacts off of that area, the stronger the level is. So the reason for this is because it means that there are bulls and bears that are respecting that area, and therefore it's an important point to take note of. Okay, so once again, if your overlap area lines up with other elements such as Fibonacci or graphical elements such as your um, moving average or pivot points, for example, it will make it even stronger. So in this GIF, an overlap resistance happens when price touches it from the first point, which is over here, and from the bottom, which is here. Basically, when there is a swing low and a swing high that line up nicely in the same area. That's basically what an overlap level is. Whether or not it is a resistance or a support depends on what the latest um, where the latest point touches the line. So if it touches it from the top, it is a support. If it touches it from the bottom, then it's a resistance. Okay, here's an example. So the swing low support becomes a pullback resistance once price breaks the support at this 105.643 level. Okay, so you can see in this GIF how price retraced or pulled back to this resistance level and in fact reversed off of it, making it now an overlap resistance. Hmm. Okay, so you can see here the minute that price, okay, here in the original image, price broke out of the swing low support. So once it breaks out of the swing low support level, it is then considered a pullback resistance. And once price retraces that level and reverses off of it, then it is a overlap resistance. Okay. Okay, let's move on. So now we're gonna combine both pullback and overlap levels. Okay. Excuse me. Okay, so here we have a big swing high resistance level, okay, at the start, and price surpasses this level over here. Okay, so the moment price surpasses this swing high resistance, it now becomes a pullback support instead. Now, price has made a pullback to our pullback support and has bounced off of it perfectly. So once price bounces off of it, it then becomes a overlap support instead. Okay, another example. So we have two swing highs that are lining up. You can see these purple circles here, and we have a swing high resistance from this. So price surpasses this level here, it breaks out of it, and then becomes a pullback support. Number three, point three, price has pulled back to our support and has bounced off of it twice. So the blue circles is where price bounced off of it. So once price bounces off, it now becomes an overlap support. Okay, I think by this time you guys probably have gotten the hang of it. So this is just my last slide, and then we will take a look at some charts. Okay, so once again, combination of pullback and overlap. Firstly, we have a multiple swing low here. Okay, 1, 2 circles here. Point two, pullback resistance. Once price breaks the multiple swing low support, it then becomes a pullback resistance, and then it reverses, pulls back to our resistance, and reverses off of it 3 times here. Okay, so once price breaks out of this overlap resistance, it then becomes a pullback support once again. So every time it crosses the level, it basically switches from a support to a resistance or from a resistance to a support. Okay, and then point five, lastly, price has pulled back to our support and reversed off of it. So this level at the 33420, you can tell that it's a very significant level because price is continually retesting it. Okay, so what's important here is that because it's a pretty significant level, you can also expect Fibonacci levels to line up nicely with this level. Okay. Okay, now let me pull out my trading view and then we can take a look at some charts together. Let me know in the chat if there are any specific charts that you would like to see. Okay. Um, okay, here are my charts. Okay, if there are no specific charts that you guys would like to see, I'll just go ahead and maybe analyze gold first. Okay. Oops. Okay. Okay. So this is an example of a really clear um, price movement. Okay, so we have 3 swing highs here, and you can see really clearly You can see really clearly the peaks here. Okay. Okay. So we have a swing high, multiple swing high resistance here at this level. Okay, and we can see price um reversing off of it. Okay, and this is on our weekly time frame. So we like to look at higher time frames first so that we get an idea of what the general direction of price is on a zoomed out kind of basis, and then we can compare with the lower time frames after. So once again, I'm looking at this on a weekly daily time frame. Okay, and I can see that we have this decreasing trend line. So I think in our next webinar next week, we will be talking a little bit more about trend lines and trend channels, but I'll just briefly go through what makes um, sig- a valid trend line. Okay, so what makes a valid trend line is if there are at least three touches on a trend line. And if it is decreasing, your trend line should be drawn, or rather, if it's a downtrend, your trend line should be drawn like this from the top. Okay, if it is a ascending trend line, then we can draw it like this, so from the bottom. Okay, but of course, this trend line is not valid because I don't have three touches on it. But this is basically what you are looking for a ascending trend line. Yeah, so sorry about my throat. The weather is getting cooler, so I'm feeling a bit under weather. Okay, so now let's look at the 4 hour time frame. So we typically like to analyze either on the 4 or 1 hour time frames, and how we decide between the two is like I mentioned earlier by looking at the chart structure. Okay, the price structure. So you can see on our 1 hour time frame, it isn't really nice to analyze on. And the reason for that is because price movement is like pretty small. Okay. It's quite small. But if we look at our 4 hour time frame, you can see that we have much clearer price movements. So that's basically what we look for. Okay, so I'm gonna analyze this on our 4 hour time frame. Okay, let's see. We're gonna start off by identifying the trend. So we can all agree that this is a descending trend line, right? Or rather a downtrend. Now I'm gonna see if I can find any graphical analysis to support that. So I kind of have a descending trend line here. Okay. Now that I've done that, the next step is to go in with support and resistance levels. Okay, here is my my second support, second resistance, my first. Okay, gonna see if I can find a closer resistance level. Okay, this level here is my first support. Okay, and then my first resistance, maybe here. And then my second support just here. Okay, so maybe just a recap. So my second resistance, I have a swing high here and a swing low here. So it makes it an overlap level. And then I also have another um swing low here. Okay, so I have bulls here and bears, both of these areas respecting my second resistance. So it's a pretty significant level, and that's why I have labeled that. Okay. And my first resistance, I just have a swing high here. Price has kind of broken out of these levels. Okay, so I only have a swing high level here. Okay, and that's the reason why my next step is to go in with Fibonacci levels to try and support these levels a bit more or adjust them and see if I have any better levels to use. Okay, first support is because it's the closest swing low to where price is currently at. Okay, and it also respects a couple of swing highs and lows. Okay, second support, the reason why I put it there is because we have this swing high here and a couple of swing lows here as well. Okay. Yeah, and it's also basically the closest level to my first support. Okay. Now let's go in with our Fibonacci levels. Okay, so here I'm using a Fibonacci projection. Okay, and for Fibonacci projection, we use these three levels and we use the tool Fib extension. Okay, that's on TradingView. If you're looking at MT4, I think it's also this symbol, but I don't think it's called an extension, but it basically has 3 points for you to analyze. Okay, and for Fibonacci X projection, just to recap, if you weren't here for our Fibonacci series, we look for a flash, okay, a flash or like lightning bolt kind of shape. Okay, something like this. Okay, here, even though you can see my 78.6 lines up nicely with my first resistance, this is no longer valid because price has already broken out of the level. Okay, so I'm just going to keep my 100% here. That lines up with my first support. Okay. Um, mm, okay. Here I can see that this Fibonacci retracement lines up with my 61.8. The 50% is no longer valid because price has already broken out of it. Mm, yeah, so just my 61.8. Okay, and this is a retracement. So for retracement, we use the 5 levels that I was using earlier, 23.6, 30.2, 50%, 17.6, and 61.8. Okay, I think that's all the levels that we have here. Okay, I think that's all the levels we have for Fibonacci. So the next step is to go in um with some indicators, and my favorite indicators to use are the Ichimoku and the MACD. For Ichimoku, I like to just look at the cloud, which is just the plots here. Okay, because if you look at all of the lines, which you can as well, but it is a little bit messy. Okay, so I like to just look at the clouds because at one glance, you can see exactly what the signals are. So if price is moving below the Ichimoku cloud like it is here, price is moving below the Ichimoku cloud, so it is a bearish signal. Okay, so it supports our analysis that price is likely going to continue to drop from the first support down to the second support. Okay, Um, but over here, our MACD is giving us a bit of a bullish signal. You can see from the green here. Okay, and the reason for that actually could be because, as I mentioned earlier, our first support is here. Okay, and it's a pretty significant level with the swing highs, the swing lows. So it's an overlap support, and we can expect price to come back and retest this level, which is doing now, as you can see. And on top of that, we also have this 100% Fibonacci projection. Okay, that has not been um it's not been surpassed yet. So we're still seeing price test this level, but because of the downtrend from this descending trend line, we saw on the daily, the weekly time frames that price is still pretty bearish on those levels, on those time frames as well. So we can expect price to continue to drop towards the second support because of all the downward pressure. Okay, but for now, it is still testing our first support. Maybe we can use another indicator. Okay, let me know in the chat what indicators you guys like to use. Okay, I like to use these three. Okay, on our RSI, we're also seeing a decreasing trend line. So it's also supporting our bearish signal here. Okay, let me know if there are any questions. Oops. Okay, if there are no questions, I think we still have time for one more chart. So if you guys don't have any requests, I'll just go ahead and do um, maybe the Aussie dollar because we recently saw the RBA releasing a cash rate statement. So let's take a look and see how price affected the charts there. Okay, so same thing, I'm gonna analyze this on a weekly chart. Okay, um, let's see. Yep, we have a descending trend line on our weekly time frame. Okay, next, if we take a look at our daily time frame, also descending trend line here. Okay, remember the three touches here. Okay, next on our 4 hour time frame. So once again, I'm deciding between 4 or 1 hour, but both of these charts seem to be pretty clear. Um, maybe I'll just go ahead and analyze this on a 4 hour time frame. Okay. In this case, I don't really have a descending trend line, I think. Yeah. Let's see. Okay, I don't really have a descending trend line here. Okay, but we can definitely see that the trend is downwards. Okay. Now, I'm gonna go in with my support and resistance levels. Okay, this is my first resistance and my first support, maybe just here. And my second support here. Okay, now we'll go in with some Fibonacci levels again. Hmm. Okay, we don't really have very nice levels here. Okay, my 100% level lines up with my second support. Let me see if my 78. Okay, it lines up, but it's no longer valid because price is already broken out of it. Okay, so just my 100%. Next. Okay, I think my 38 lines up, yep, with my first resistance. Um, okay, my 61.8 also lines up with my second support. Okay, so you can see here I have a confluence lab area here. Okay, so what I am doing here is I have recognized this Nike tick shape. So it's upside down, but this is the shape that I'm looking at. Okay. Um, yeah. So for this, we are using the Fibonacci extension tool. So it's the same retracement tool, but instead I'm looking at the 127.2 and 161.8. And I can see that both of these levels line up with my second support. Okay, and I feel like that's one of the reasons why you can see this reversal of the first support here. Okay. Okay, now let's pull out some indicators to support our analysis. Okay, price is moving below the Ichimoku cloud. So it's giving us bearish signals. MACD is also giving us a bearish signal, so we can expect price to continue to drop because of all the downward pressure. Once again, our indicators are also supporting this. Although we are seeing this rebound off of the first support, as I explained earlier, it's likely because of this 127 and also because of the release of the RBA cash rate. Okay, but yeah, there's a lot of downward pressure, so we can likely expect it to continue to drop towards our second support. Okay, confluence areas also tend to have um, confluence areas also tend to attract price. So we can expect price to reverse off of it, but we are also expecting price to be attracted to this area. Okay, so areas like our second support, where you have the 100% Fibonacci projection, 61.8% Fibonacci projection, and this huge swing low here. So we can expect price to continue to drop here. Okay, any questions before we go? You have to include the wick in swing high and swing low in putting resistance and support. Um, for Fibonacci, I feel like it's good practice to include it. But for support, swing high and swing low and for resistance and support levels, it doesn't really matter because as I mentioned earlier, it's more so levels, areas rather than levels. So you can see here, even though I didn't include the wick here, right? Um, okay, let me zoom out. But you can see I actually highlighted this area here because of my Fibonacci levels that line up nicely. So for these support and resistance areas, I am expecting them to be areas more than levels. So yeah, it doesn't really matter for support and resistance levels. Okay, I hope that answers your question. Okay, any other questions? Okay, if there are no other questions, yep, no worries. Thank you guys so much for joining me today. I hope you guys found this helpful. And for part two, I'll see you guys next week. Thanks, everyone. Have a great rest of your week. Bye.